Hi there, welcome to my channel, where I share with you the best tips and tricks on how to make money in any market condition. If you're new here, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of my future videos. In today's video, I'm going to reveal to you how you can use the 2024 recession to get rich. Yes, you heard me right. The next recession could be your golden opportunity to create massive wealth for yourself and your family, if you know what to do and what to avoid. But before we get into that, let me ask you a question. Do you know what a recession is? And do you know how it can affect your finances and your lifestyle? Hey, thanks for watching this video from Wealth Map, the channel that helps you build your wealth from scratch. I hope you enjoyed it and learned something new. If you did, please show your support by subscribing to the channel and sharing it with your friends. It really means a lot to me, and it helps me making more awesome content for you. A recession is a period of economic decline, usually lasting at least 6 months, that affects the whole country or even the whole world. During a recession, you can expect to see a significant rise in unemployment, a drop in wages, a loss in consumer confidence, and a decline in values across everything from stocks, food, energy, and services. These effects can sometimes last for years and can have a huge impact on your personal finances and your lifestyle. For example, you may have to deal with losing your job, cutting your expenses, paying off your debts, and postponing your plans and dreams. But that's not all. Along with the recession, you can also have to deal with 2 other factors that can affect your investments. The first one is a decline in earnings. Every quarter, companies report their revenue and give guidance on their future outlook. But lately, they've been cutting their forecasts, bracing for slow or even negative growth, and warning about recession risks at the highest pace in 10 years. This means that many companies are struggling to make money, and their stock prices are reflecting that. For example, look at this chart of the S&P 500, which shows the performance of the 500 largest companies in the US. You can see that since the beginning of 2023, the index has been falling steadily, losing more than 20% of its value. The second one is layoffs. When consumers earn less, they spend less, and when companies see less demand, they begin to scale back on their expenses, with usually employees being the first to get let go. In fact, just a quick Google search for mass layoffs shows you dozens upon dozens of companies who are all trimming their workforce. And as Bank of America explains, the U.S. economy will soon start losing 175,000 jobs per month. So what does this mean for you and your investments? And how can you use this information to make money? Well, the first thing you need to understand is that recessions are not all bad. In fact, they can be a great opportunity for savvy investors to buy low and sell high, and to take advantage of some incredible deals and discounts that are only available during economic downturns. Even Warren Buffett, the world's most famous investor, has said that bad news is an investor's best friend. He also said that be fearful when others are greedy and be greedy when others are fearful. What he means by that is that when everyone else is panicking and selling their stocks, you should be buying them. And when everyone else is euphoric and buying their stocks, you should be selling them. This is how he made his fortune, by buying undervalued companies during recessions and holding them for the long term until they recovered and grew. For example, during the 2008 financial crisis, he invested $5 billion in Goldman Sachs, a bank that was on the verge of collapse. He got a 10% interest rate on his loan, plus warrants to buy Goldman Sachs shares at a discounted price. He later sold those shares for a profit of over $3 billion. Another example is during the 2020 pandemic, when he bought shares of Apple, Amazon, Verizon, and Chevron, among others, at bargain prices. He later sold some of those shares for a profit of over $11 billion. So how can you follow his footsteps and use the 2024 recession to get rich? Well, the first thing you need to do is to prepare yourself financially. This means that you need to have a solid budget, a healthy emergency fund, a low debt-to-income ratio, and a diversified portfolio. A budget will help you track your income and expenses and identify areas where you can save money and reduce your spending. An emergency fund will help you cover any unexpected costs or emergencies that may arise during the recession, such as medical bills, car repairs, or home maintenance. A low debt-to-income ratio will help you improve your credit score, lower your interest rates, and free up more cash flow for investing. And a diversified portfolio will help you reduce your risk, balance your returns, and take advantage of different asset classes and sectors. The second thing you need to do is to educate yourself. This means that you need to learn as much as you can about the economy, the market, the companies, and the opportunities that are available during a recession. You can do this by reading books, blogs, newsletters, magazines, and reports, by watching videos, podcasts, webinars, and documentaries, by following experts, analysts, mentors, and influencers, and by joining communities, forums, groups, and networks. The more you learn, the more you will be able to spot trends, patterns, signals, and indicators that will help you make better decisions and avoid costly mistakes. The third thing you need to do is to take action. This means that you need to start investing or increase your investing during the recession and take advantage of the low prices, high returns, and long-term growth potential that are available. You can do this by following a simple strategy that I call the RICH formula. This stands for research. This is where you do your homework and find the best stocks to buy during a recession. You want to look for companies that have strong fundamentals, such as revenue, earnings, cash flow, assets, and market share, that have competitive advantages, such as brand, innovation, customer loyalty, and network effects, that have growth opportunities, such as new products, markets, segments, and partnerships, and that have low debt, high dividends, and stable cash flow. Invest. This is where you buy the stocks that you have researched and that meet your criteria and goals. You want to buy them at a low price, preferably when they are undervalued, oversold, or trading below their intrinsic value. You also want to buy them in small batches and gradually increase your position over time as the market fluctuates. This will help you lower your average cost and increase your potential profit. Compound. This is where you reinvest your dividends, interest, and capital gains and let your money grow exponentially over time. You want to do this as often as possible and as long as possible to maximize the power of compounding. This will help you increase your returns and accelerate your wealth creation. Hold. This is where you hold your stocks for the long term and ignore the short-term noise and volatility of the market. You want to do this until your stocks reach your target price, or until your goals change, or until the fundamentals of the company change. This will help you avoid emotional trading and capture the full potential of your investments. If you follow this simple formula, you will be able to use the 2024 recession to get rich and to create generational wealth for yourself and your family. If you are, please do us a favor and hit that like button and subscribe to our channel. It really helps us out and motivates us to keep making more videos for you. And if you want to be the first to know when we drop a new video, make sure you turn on notifications by clicking the bell icon. And if you have any questions or opinions, please leave a comment below. We read every comment and try to reply to as many as we can. Back to the video. Don't just take my word for it. Listen to what some of the most successful investors in history have said about recessions and investing. John Templeton, the founder of Templeton Funds, said that the time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. Peter Lynch, the legendary manager of Fidelity Magellan Fund, said that the real key to making money in stocks is not to get scared out of them. And Ray Dalio, the founder of Bridgewater Associates, the world's largest hedge fund, said that the biggest mistake investors make is to believe that what happened in the recent past is likely to persist. So there you have it. That's how you can use the 2024 recession to get rich. I hope you found this video helpful and informative. If you did, please give it a thumbs up, share it with your friends, and leave a comment below. And if you want to learn more about how to make money in any market condition, make sure to check out my other videos and subscribe to my channel. Thanks for watching, and I'll see you in the next one.